Get back into Bitcoin, MicroStrategy, or Coinbase. How would I play it? All right, we'll take a look at that. We've been real bullish on Bitcoin, by the way. It hit the 2.618 in the after hours last night, which was definitely the sell. Yeah, you know, it's funny. The first couple of broadcasts I didn't use my mic system, and I was like, oh, the sound is okay. And then I was like listening to it on the computer. I'm like, this is dog shit. So I was inclined to do the my mic on it, which is what I usually use anyway on all my broadcasts. Coin. Interesting. Any other things anyone wants to talk about? By the way, if you could do me a solid, if you could retweet the post, that would be very helpful. Like and retweet, help get the algos algoing. Yeah, the picture looks all right. I'm looking at it on the screen. So that's it. No one wants to talk about anything else but Bitcoin? Come on, you guys have to have something more for me. All right. If that's how it is, that's how it is. All right. Give it another minute, and then we'll begin. Someone was asking me what the name means. So I usually drink coffee while I do the broadcast, and if you ever have done a cappuccino machine, there's like a little foam at the top. It's called Crema. So that's just my take on it. All right, I think we got enough to go here. Amazon, all right, we could always talk Amazon. Costco, that thing is unbelievable. I can't believe the multiple they put on that thing. I know. I don't know why people aren't typing in. Usually we get more. Questions. I think people are shy. Excuse me. Maybe they're just shy, you know. Giving me all the Momo names, huh? Tesla. All right, let's get going here. All right, so if you came in late, do me a solid, like and retweet the post, get the algos algoing, and we will begin. If you come in late or we decide to rewatch this, the broadcast saves, hopefully, when the equipment doesn't crap out. By the way, if I lose any sound, somebody let me know with a actual message. That would be very helpful. Because sometimes we lose sound and I don't know it, and you're basically just watching me talking, but there's no sound in it. All right, so let's start out. Let's take it from the top, I guess. So I was taking a look at this VIX situation here, and I'll tell you, one of my big strategies when I trade is selling premium, option premium, particularly out of the money premium. And the VIX is too low to do that down here. We're just putting around the 14s, 15s. I get it, we're through the elections. There's really very little to worry about with regard to the Fed, except they have the December meeting, which they're expected to cut another 1/4 point. But it's sometimes important to expect the unexpected. And I think if you're playing for a year-end rally, and I know many of us are, excuse me, it's probably a good idea to have on some protection here. And I am definitely more interested in buying option premium than selling it. Particularly, I don't know what happened to my voice here, sorry. Particularly with the VIX down here this low. I'd be more into selling premium if we got up to the higher end of the range, which has been in the 23s in recent days, weeks, and months. And we've had a few failures there. So for the bears to really get going, I think they need to clear the 23s, and then they'd impress me. Shorter term, I was seeing this head and shoulders pattern in the NQ futures. I had posted charts about that, and we actually broke the neckline today, but then very violently rallied back up over it. So usually when that happens, we would rally back up to the right shoulder and then have the potential for a double tap head and shoulders. I'd say if the bulls, though, can get it over 21,237.75, they're probably in the clear. If it comes back below the 21,121.75 to 21,098 quarter, I think we're looking at 20,902.75 and 20,767 half. So there could be some big movement if that fails. If you want to use the 200 MA 30-minute as a gauge, usually I like to buy dips above it or short rips below it. The ES is similar, except the neckline, the apples-to-apples neckline I'm using there is 6,013. I guess you could make the argument yesterday's intraday low was 6,013 half, but I was using the prior 2 sessions ago high, and it came down right to where we should have. We filled the first triangle to 59.90 quarter and bounced pretty hard. If we were to rip into the close, the downtrend line comes at 6,031.64, so half. Moving along to SPY, I was going to be very surprised if we just sailed through 600. That did not seem like a feasible strategy for me to just get up there and then clear after the run we've had. Now, believe it or not, a pullback to as much as 586.12 is still bullish. I would start getting careful, though, if we lost today's low of day, given the fact that it's a lower high than yesterday, and it's a hammer candle. So I think if bulls are long, they'll probably use low of day as a stop at 594.37. If that breaks, we still have trend support right below at 591.42, but given where we are, I don't know that I'd hang my hat on that right here, because, we had that rising wedge. And to me, I don't know that that would be the hold. I would probably press for the move to 586s. Oddly enough, today's low of day was the top side of the rising wedge. So technically, the market's done everything right. Now, if we do continue and extend, 604.35 is the 2 times range, and 615.62 is the 2.618. So those would be my big upside targets, and I would be peppering out orders accordingly because, of course, we're the retail schmoes and don't get the good fills, particularly since they stopped charging commission. Nothing is really for free, so I think that the order fills suffer. With regard to Qs, we're back into the channel here. We had 3 days below it after Halloween, and then we busted into it again, and we got over the 501.35. So pullbacks to as much as 501.35 to 503.52 are still okay. On the upside, the 2 times range there is 525.30, and the 2.618 is up at 540.10. Now, if we were to go to channel high, just full beast mode, by the time it got there, it would probably be closer to 550. So if you want to do some kind of a call spread playing with an upper strike at 550, I'm good with that. If you want to go like longer dated into December or January, or maybe even February, I'd be into doing that. I'd be curious to see if the thesis about the sell the inauguration plays out, sort of a sell the news situation. So I would put that as a potential catalyst on January 20th. Yeah, I see some people messaged me. So obviously Bitcoin has been super bullish, and we've been bullish on the Bitcoin, even when it was a little controversial. So a few things to note. We liked it on the big dump, just an FYI. That was when we talked about buying the dip on 8.5, because I thought it was a look below and fail of the 53,635. Then we actually talked about the reload at 54,230, which actually had an overshoot, another look below and fail. And then once we broke up over the trend on 1014, it was on like Donkey Kong, and then a press when you got over 927. We actually checked back to 927, so there was an opportunity. So it's been trading very technically and well. The problem we have here is it's up to the 2.618 of the range that I defined from the 927 high down to that 9.6 lower high. Now, if you want to really bake your bagels here, for lack of a better term, if I adjusted that down to the dump low from 8.5, the two times range then would be 84,905, and the 2.618 would be at 95,887. So if you want to put that in, that's fine. But for me, I tend to like be a little bit more conservative with my orders and my price targets. So it doesn't surprise me that we stalled right here on that 2.618, which would be 90 on the shorter range at 90,297. So it seems to me like they're going to probably try to make the run at the 100,000, but it's not a guarantee, of course. Now, if we were to have a lower high tomorrow and lost low of day at 85, first of all, 85,890 to me is a hard stop given the fact that we have a Dragonfly Doji at the high end of a range. I don't know that this is going to be the end because we saw a similar situation on 11.7 and we just kept on going. It may just be the pause that refreshes for a few days, but I don't want to get caught out there. And if we were to dump, we could do that whole fib to fib thing and come down to the 2 times range at 81,450 and possibly even fill in that gap to 77,100. That's, of course, the 11.8 gap fill. Now, I know it's a little controversial. Yeah, I agree. It's hard to chase Bitcoin here. Oddly enough, that's probably the right trade, but I would not be jumping, first jumping in here. I'd be waiting for dips. MicroStrategies, I think they own a lot of Bitcoin at lower prices. It's sort of like a levered play. And this, of course, will do well as long as Bitcoin is ripping. Now, I had seen this as a consolidation range between the 327 high, and I used the 8.5 dump low because it lined up really well with the low from 5.1. The problem also with MicroStrategies is you're basically up to the 2.618 of the range, also beasting through the 2 times range, which was 299, and of course 360.18 was the 2.618. Could it keep going? I mean, once you get into these kind of frenzy moves, all technicals can sometimes be pushed out the door, and you could just, I mean, would it surprise me on a super bulldog tape like we're in for crypto for it to see something like the 4.236? Honestly, I would not be surprised. And then, I mean, you're talking about a really crazy move that could take you up to 520. So I don't know that that's going to happen, but, if you're long shares, maybe sell some upside calls. Or if you want to do like the share, I guess it's share enhancement, but it could also be share repair if you're underwater, where you buy, let's say, a higher strike call and then sell 2 times above it. Let's just say you have 100 shares of MicroStrategy. You buy 1 call and then you sell 2 times higher. So it's covered by the call you're buying and your shares. You're leveraging your shares to enhance the play. The only thing I don't love about that is if you do get the rip, sometimes you're constrained by the options. So what I'll do in a situation like that is I'll sell the 1-to-1 and take the profit on the overwrite or the enhancement part. And then what I'll do is I'll set a stop on my share price, just like I would any other time. And then let's say I'm stopped out of it. Okay, now I'm short, let's say, a naked call. So what would I do there? If I need to cap out my margin, I'd buy a still higher strike just to take off tail risk. Similarly, on the downside with puts, you could do the same thing where you buy a lower strike put if you're short a higher strike one and you cap out your margin. But then what I would do, so let's say the stock does start dumping. Now I'm stopped out of my shares. I'll just keep lowering the stop on the short call as I would on the shares. So there's ways people do this with how they put their stops on their options. The way I do it and the way I don't want to say suggest doing it because everyone has their own way of doing it, but this is my method. I just use the share price. So let's say the stock is going lower and I think it's a pullback leg. I'll just keep lowering my stop on the overwrite or the naked call on prior day's highs, right? Or prior day VWAPs if I want to be, Johnny on the spot. So that's the method I would do with that. Ideally, in that situation, you'd want to ride the call down, right? Because you're playing effectively short. Or if you get a rally again on the upside and you want to participate, you could then just buy the shares and then you have the call against it already and you're already hedged. So that's a way I like to do it also. The other way is ideally if you do it in a near-dated situation and it trades up through it, you just let them take the shares, right? And you call it a day. I think when I was younger, I wasn't as sensitive to price, and I'd sort of re-up, and I'd often, it would often work out, but I'd sometimes find myself in a little bit of trouble there. So price matters. I would say the best risk management practices are order entry, meaning having a good trade location, and of course size. So if you don't have as good location, but you want to play with it, do smaller size. Also, I think one of the mistakes I made when I was younger was I thought I had to be all or nothing. If let's say I had 500 shares, I'd have to sell all 500 shares, on my order. Now I'll scale out of things where it's like I'm out of 200, maybe I'm out of 100, and then, I keep the last two and I dump them up at the highs, where I go 100, 100. Or sometimes good practice is selling half and then peppering out the rest. I mean, the price of commissions are so cheap, and in some instances there are none, so why not? Coinbase, I think, we'll go back to Coinbase. So long story short with Coinbase, I think if you're long, just use 300 as a stop. And if you want to press it for the move to 368.90, just wait for it to clear 334.86. On a ripping tape, could that happen? Yeah, I mean, why not? I think the risk reward here is a little smaller, and you probably don't want to risk more than, $1 for every 3 you could make. But up here, I think the risk reward is more like 2 by 1. You want to make at least 2 for every 1 you risk, and that to me would dictate smaller size. And I know I had said this, I think this didn't get cut off. The best way to mitigate your risk is to either have good trade location and position size, or if you have not so hot or stellar trade location, either pass on the trade or just do smaller size or hedge it up, right? So that makes some sense to me. By the way, if you came in late to this, or you were cut off the last time, I'll be combining both of them in a little software program I have, and then posting it on my YouTube channel and on Vimeo too, right? Moving right along, I was talking Mobileye, and that's when I noticed this crash. So I actually like the Mobileye chart, because to me it looks like an inverted head and shoulders, or really more of a cup and handle with a neckline at 1485. It looks to me like it's trying to press through the 100 MA. If we do the whole MA to MA thing, you go up to 2259, but let's not get too crazy here. The 2 times range is 1922. The 2.618 is 2192. There's a gap fill at 21. I was saying I don't see a lot of volume to prevent this from going up to maybe 2485 or even 25. So the play I was trying to fill, which it still hasn't filled because there's no frickin' volume. See if it did yet. Maybe I should be a little less ambitious with this. So then there's actually some volume in some of these options. I was out in, I know this is going to sound ridiculous, out in January of 26, and I was trying to short the 10 puts and buy the 15.25 call spread. I was trying to fill it for $1.10, then $1.15, then $1.20. Now I'm trying to put in $1.25. I mean, I'm sort of I'm very particular with how I fill things, which sometimes gets me, I'll sometimes miss the trade, but, we're not in like one of those like 9, 10 to 1 breath, pumping situations. I mean, we have negative internals on the market today, so it's not like I feel, there's no FOMO here for me. It's not like Mobileye is just going to start ripping $10, although you'll see there'll be some contract or something, and it will. The news tends to follow along the line of least resistance. The weird thing about Mobileye here, though, is I actually was trying to fill this in 2 accounts. Let me try and adjust it in both. I don't think the 5 cents is going to eat up my return too much, right? It's weird. One of my accounts fills, and sometimes I'll put the order in on the second account first, and that'll fill, and then I won't get it on like the main account, which is super frickin' annoying. I think there's some way they route it. I had this problem when they were on toss too. But it is what it is. So Mobileye, yeah, I like that chart. I mean, obviously, the space is hot now with Tesla being up as much, although that was more like the Trump trade. Oddly enough, Tesla today, low of day, you know where it stopped? The top side of the old up channel and the gap fill, right, from 11.8. So very simple. Are we technically... I mean, it's hard to say you're one time framing because this is the 1 day down. But let's just assume we are. Let's play the game. So what you'd wait to do is buy it up over a prior day's high, and I mean, then you're looking probably at a move closer to 384s to 400, maybe 402s. Is it overbought? Yeah, maybe short term, but I mean, we've seen Tesla, do a lot of crazy things before. So how would I hedge this? I'd probably buy a put spread with 270 as the lower strike because that's the neckline. Or if you're, I mean, I don't know that I would be chasing this here with the low IV, but if you want to do some kind of a put spread longer dated, maybe sell the 270 puts. I mean, if you go out to January, there's $7 in them there puts, 720. So if let's say you did a $20 wide spread, would I risk $20 to make 315? Me, probably not. But some people do have the FOMO. Or if you want to go longer, let's just say you want to go longer dated, and let's say let's stay in this series. Let's say we wanted to do a put ratio, right? We like to do those. So we go up to 295. I would have preferred 300. We'll see I don't know if that would fill, but you could get that. Yeah, maybe you can actually. Hold on. I'm just going to keep pumping up the upper. All right. So you could fill it for 95 for a 52-cent credit. If you want a little bit better, yeah, that's annoying. All right. I was trying to walk down the strike. So that would be the play, 295, 270, 1 by 2. And you could get that on for a 52-cent credit, and you have 66 days for it to work. Now, that's a longer time, and you probably want to have some decay on the lower end. And it's a credit play, so let's say we go out to just December, which is 38 DTE. Let's do the same strikes. My guess is it'll be similar, although I don't know if this will fill for a credit. No, it's a debit still, $1.90. So, and that's already a pretty big pullback to get there. I mean, you could put it on you could do the 290, 270 for 20-cent credit. So I'm good with that. I may actually fill that in a minute. But that makes some sense to me to do it. Small size, though, because the IV is... See, what I like is when the IV is pumped because you can get those strikes wider, right? And it increases your probability of success. I think the big mistake a lot of traders make is that they have smaller accounts, or they're looking to really make the millions right away, and they use options for leverage. I used to do this too. I used to always be balls to the wall, max margin, and like by the end of an expiration, I was like, trying to just get through maintenance calls because I was just like so levered. But now I trade very differently. It's a lot more conservative. Very rarely use any margin at this point. I just sort of use a smaller portion of the account in cash to trade on. But, that's just choice. I mean, if you're young and you're bold and what is it they say? You could either be an old trader, conservative trader and old, or bold and you blow out your account young, which kind of is what happens once in a while, right? If you're not careful and you get caught, because every once in a while the market has news that just catches people. I mean, even I get caught sometimes with I didn't see something coming. I mean, you get blindsided once in a while, so you have to factor that into your business model. And I think I've discussed this in prior videos that, Intel I think still owns some of Mobileye. Did they blow out the rest of their shares? I'm not sure. That may have been weighing on the stock too. But for me, what I like to do is I don't like to lose more than, let's say, 10 or 15% tops on my account, because once you get past that, it starts getting very hard percentage-wise to make back the money. It's almost closer to 1-to-1, a little over that at those levels. So my general rule of thumb is that if my account breaks into that area, once in a while I'll go through it and I'll cherry pick some positions to keep, but I usually do a clean sweep and just close it all out and then just start again. Because I like to be in a position of neutrality in my mind. I don't like to be in a full defensive position where I'm just trying to manage losers and I can't focus on, winners. So I'll cherry pick things. I'll go through, the trades I have on. Hopefully there aren't too many in a situation like that. And it's rare. I mean, those don't happen very often. I can't even remember the last time something like that did happen. Probably, We were out for COVID, right? Remember we talked about that. My friend had told me about COVID being pretty bad in China, and we were warning about that for weeks and weeks, and we dodged that 35% drop for the most part. I mean, everyone still had a little bit on, but and even some short in some instances. But that was something. And then we've had some big calls over the years with the first Trump election, the Brexit, and now I guess the second Trump election. And it, of course, being positive for markets. Remember that limit down in 2015, 2016? That was something. A long time ago. But these are just some money management rules. I know it's not as sexy as talking about, a trade here and there, but I think it'll, benefit you longer term. So Intel was one. All right, so let's talk about a trade that caught me, right? Was Intel. I was actually short Intel for earnings. And the problem I had is it just knifed through my lower strike. So I was still short the 20, it was either the 25 or 20, I think it was 26 puts. That was my overwrite. But I had decent size on, so this most recent rally, a few sessions ago, I just booked the overwrite and I got it off. I think I actually either got it off for break even or a small, I think it was a profit because, there was so much time decay at that point. And now Intel's pulling back off a 38.2 retracement at 25.84. So that to me is a very weak bounce. If you want to be long Intel, make sure it gets over 25.84. And then here's the problem you're going to have with Intel. There was a huge amount of volume that went off at 29.73-ish. I would probably buy Intel for a reload down at the 50 MA at 22.36 because it's now upward sloping, and it was support on Halloween 1031. And I mean, if it got down there, I'd probably sell some out of the money puts, 20 or below strike. So that would be my, let me see if there's actually an Intel trade to be done. Because, I don't necessarily have to have these gigantic winners. They're nice though, but I usually like to have trades that I can replicate over and over again. Until, traders do what works until it doesn't. So I have certain stocks that I do that in where I row the position. One of them also, I've talked about it before, is Enbridge. I'll wait for it to come down, or I'll do a put ratio, and then I'll let them give me the shares, and I collect that big beast of a dividend for a while, and then I'll pump it out later, or I'll sell some calls against it. But that's like a longer term strategy. It's not the sexy kind, but it's the kind that, at the end of the year, you look at your account and you realize X amount of money is made from dividends. I'm actually shocked every year at what percentage that I have from dividends. It's probably more than it should be, but that is the case. As far as Enbridge, by the way, it's to me now it's not as great of a setup here. You're getting, the 47s is the real highs, but for me, I'd be more interested in Enbridge back with like 38, 37, 36 handle down there. That would interest me. And that stock, they have the pipelines. They may benefit from Keystone XL. And up here, believe it or not, it still has a 6.26% dividend yield. I like this when it's like 7 or 8, but, we don't always get that. I'm just checking the sound. That looks all right. Let's talk Amazon. I'll tell you, I watched the halftime show today. I usually don't, but I caught it today, the CNBC halftime show. And all of the traders in there were long like the Mag 7 names, right? And apparently they were selling at it a lot of positions to buy Amazon. Now that doesn't mean that they're wrong, but it makes me think that the trade could be a little crowded here. But I'm looking at Amazon. It looks just to me like it's bull flagging here. I think you could buy dips in that as long as the 10 MA holds at 201.32 and rising. If that fails, you're probably coming back down to somewhere between 188.65 and the 20 MA at 194.68. On the upside, you're pretty close to the 2 times range. The smaller 2 times range, where I'm going to talk about that in a minute, of 213.16, and the higher end is 232.18. This, of course, is the run that I measured from the 8.5 low up to the 8.21 high, but I would be comfortable, given now the gap and go, raising that up to the 9.24 high, because it was a gap and go above there. So the 2 times range there would be 239.13, and then the 2.618 would be 266.17. And on a cooperative tape, I don't see why we couldn't get up to the 239. So if you want to do some kind of call spread playing for that, maybe, Yeah, I mean, as long as the 201s hold, I don't see a problem with that. Let's take a look at that. Amazon, if we were going to put that on, I just want to, all right, sound is okay. If we're going to put that on for a trade, let's say we went out to January. I usually like to give my trades a little time to work, and I'll talk to you about what I do in a minute when they don't. So let's say 210, 230 for $6.53 debit. And then if we were going to sell, let's just say we sold on the neckline at 195. There's not a lot of juice there. 195, 185. I mean, the whole trade is on for a $5 debit. Let me do send. Max profit on a one lot would be 1,500. Max loss 50. See, this is the one-to-one type of situation here. Welcome to the low IV dilemma. So yeah, I mean, would I sell something against the neckline for a $10 risk for $1.54? No, I mean, there's no effing way. So here I'm stuck again, either having to just sell naked puts here in a stock that's up a lot, which, you know, I'm comfortable doing, to be honest, as long as I have some risk management and stop. So if, let's say I sold the 195s to buy the 210, 230 call spread, it's 354. I'd probably build 350 or 345 for some kind of an intraday dip. I'm good with that, but you got to be really disciplined here and make sure you don't let it get below the 10 MA on you, which is in the 201s. What was the other one? Costco. Last time I was in Costco, I was in Florida. It's like, I guess it's like 5 or 6 months ago. Big topping tail, right, on that 811 can. I mean, it's got to hold 923.83, and believe it or not, that negated a double tap head and shoulders pattern. So Costco should be bullish here. I mean, 980.5 would be the 2 times range, and 1,015.52 would be the 2.618. But it's got to hold 923.83. If not, you're probably coming down to 910s and maybe below. So I mean, Costco is just a monster. It's Costco, and then the other real big Mac Daddy is, of course, Booking, which is just, I mean, this stock is insane. Narabozu candle yesterday, for those of you who don't know what that means, I'll be your cheat sheet for the day. It's basically a big body candle that opens on the low and closes on the dead high. That's the textbook, the Steve Nissan candlestick charting patterns definition. Oddly enough, I've never even read the book, but I know all the patterns. But if usually the pattern with that is you get a kicker, which is another big body candle, or the dubstep situation, which we're getting today. So if you're long, whatever low of day today is probably your stop. We could just bull flag out here a bit. But, I mean, honestly, this is still fine as long as it's above 48, 56, 60. I mean, imagine if they did just a 10-for-1 stock split. The stock would still be $500. I mean, this is very impressive. I mean, this stock came from the channel low on 8.5 to the channel high on 9.26 and just consolidated, and then it was a gap. It before earnings was above the channel and then a gap and go above. I mean, I don't know how much further this is going to go. The 2 times range is 53.6198, and the 2.618 is 6,036.21. The money flow is not really confirming new highs here, but it's off a bit. The problem I have with Booking, and and this was even a problem when it was a $500 stock, the option bid and ask is just like you could drive a truck through it. Or I shouldn't even say a truck. You could drive like an aircraft carrier through this. If I'm looking at, let's just say, the January puts, because I have them up, the 5,000s have a $10 wide, and I've seen this even worse before. And the at the money straddle is like $10 wide. So I guess for a a $5,000 stock, that's not so bad. But I remember it being $10 or $15 wide when it was a $500 stock, which was kind of wild, right? Any other questions? Let's see. We did. If you came in late, let me just make sure the sound is good. Yeah, the sound is still working. I don't know why that happens. It just randomly cuts out of sound, and you could still see the picture going, or it looks like it's frozen. On my end, it's still going, but there's no sound. And then I have to rewind it and play it back, which is super effing annoying. BYDDY. This is that BYD. They have an ETF, by the way. I mean, a ADR. A lot of people don't know about this, but it's BYDDY. That's the Chinese Tesla, basically. And it blew its brains out on 10.7, which is, I've now made a extreme channel high, but it's kind of coming into where there should be some support, right? Around 68.56. Ideally, I'd like to buy this on a bigger dump down to the 200 MA and the main channel low, but I think between 68s and then 63, I would probably buy a dip if we got to 63.65 or lower, because that was the breakout in BYDDY. Let me see. Apple. I was watching, I think one of the technicians, Carter Worth, was saying he thought that this was a Head and Shoulders. I don't see that. I mean, I'd be happy to check out his work and see where he came up with that. But, I mean, maybe you're building out a right shoulder here. But for me, this just looks like a very large consolidation pattern with the move post-earnings as noise below the neckline of the consolidation. And then we got back up in it and held. So the real lower end of the consolidation that I'd feel comfortable being long into would be 213.92 to 216.62, really that 216.62. But shorter term, it's got to hold 220. As long as it holds 220, 230 to 233 is the upside range, and then the outer bounds is 237.23. This to me just looks like it's consolidating after a really big run, and then that move below earnings on earnings was just noise because they bought it right back up 1, 2, 3, 4, I mean, I guess 5 days below there, and they just brought it back up into range. So my vision of this chart is different than his. I mean, I could make the argument it's a big, complex top that's forming, but it's not bowing enough for me. I like to see it sort of when it forms a dome over the. I mean, I guess I sort of see it, but not really. I'm not agreeing with him on that chart pattern. Yeah, I mean, dollar strength is not good. That's why gold is getting crushed, right? DX. Let's take a look at the dollar. You're into some resistance here. I mean, this came up really hard from the bottom. So 106.126 to 106.517 should be resistance, but the dollar's still bullish on pullbacks as long as it holds 105.156 to 105.01. So yeah, maybe there's like a buck or so downside, but this to me looks like the whole chart has changed. And we got bullish on the dollar with the look below and fail of the 827 low, right? Down around 100 and something bucks. I had said I thought 100 to 99s would hold, and probably we'd get a rally to 103s to 105s, and here we are. That Mobileye trade, Phil? I actually have a trade out for TLT for like a double bottom type of play, because the money flow isn't really confirming new lows here. So yeah, it would have to come down again, but I have it just sitting out there for $1.95 for the January 26. For some reason, I'm like going out a year on a lot of these. 90-100 call spread, and then short 85-80 put spread. My guess is that there'll be some type of rally in bonds between now and then, and I'll have some time decay. I don't usually like going out that long, but with the IV this low, it seems like it makes a little sense. Let me take a look at that Mobileye trade. I really would like to fill that today because I just have a feeling this thing is just going to start kiting up on me. And if it doesn't and it pulls back to the neckline, I'll just add to the position and raise the stop, right? It's just going to fill. I just upped it up like a few cents and it's still not filling. Maybe by the close. All right, I'll leave it out at $1.25. Is it on both accounts? Let's see. Yep, it's on both. So I'll just leave that there for a minute. I really don't want to pay. I may have to pay over, which I do not like doing. But if it's by like 2 cents, I'm not going to, go nuts. And I'd wait to add. Thanks. A lot of you are coming back. I apologize. The X software or whatever, they're very, very annoying that it keeps crashing. If you could like and retweet the post so people see it, that would be good. I think we ended on the dollar on Dixie, and yeah, we liked it below, in the hundreds for the move up to 103s to 105s. Up, I didn't know that it would get to 106s. I thought that 11.6 pop was the end, and then it dumped, and I felt real super smart, and here we are back up. But over 105, 156 to really 105.01, I'd say the dips are still buyable, or at least not shortable. Breath today is not so amazing. 2.61 to 1 negative and 1.56 to 1 positive on NASDAQ. The AD line is just a freaking joke. Minus 1565, that's not so good. The ticks are, except for the 1300 candle on the 30-minute, they're all distributive. Below the zero line. So today is a distribution day. It's not really a hardcore one, but it is definitely a distribution day. I think people are just selling 600, which to me makes a lot of sense. BABA, by the way, is coming back into our BTD range. I don't rule out the possibility for an overshoot to 85s, maybe even 83s, but this area lines up with the breakout and the 61.8 of the range around $90. So I'm trying to fill an order in there. I was trying to sell the 85.75 November put spread for what am I trying to fill it for? A 41, it was this can't be correct. Sell the 85 buy, that's weird. I guess I'm going to cancel that because it was not as big of a credit as don't delete. It was part of it. Here it is. It was, oh wow, I have it. All right, so that's very odd. I had it in, I guess I was glad I caught that because I had put that in by mistake. The trade was to short the 85.80 put spread, bull put spread in January of 25, and to buy the 90.95 call spread, and I have the order out for, and I'm probably not going to get filled, for 60 cents. So I was hoping for a pullback fully to 90 for that to fill, but it's trading $1.04. I mean, I would bid like 95 cents to $1. If that fills, you could put on smaller size and then add to it. But I mean, I've had weird situations with BABA where I have to like sit in it for a while. It takes a while for the trade to work. I'm usually right on that, but it sometimes takes a few minutes, Like a few, when I say minutes, I mean like days, or weeks. So I like to give myself a little time. Because Bob has a bit of a mind of its own. That BITO trade we put on is nicely in the green now in January of 26. That was to short the 14 puts, buy the 10 puts, buy the 20 calls, sell the 30 calls. So we're on our way. Home sweet home. So I think in the future I'd probably do IBIT, but BITO, or whatever, has options. And yeah, I like trimming some here at 24.36. I have a full order out on that to prune the hedges closer to the 26s, I guess it would have to get up to. But I mean, I think at 24.95, which is the 50% halfback, the halfback, I'll probably be out. So maybe like one more up day would be good. And then I'm going to raise my stop to the 200 MA at 23.48. But that's been a honey of a trade. And that was, of course, on the big dump back on, was it 8.2, 8.5? And then it retested. So we've been in this for a bit. So we're getting some nice decay in those outer strikes. I viewed the risk on that as very low when I put it on. We have a pretty good record in crypto, right? I actually, given the move now in Doge, that was sort of like my one blemish, but I've held on to Doge for a while, and now that's profitable too. So technically, I've never had a losing crypto trade, ever. So that, and I don't trade it that often, but probably enough that I should have some. And now watch, I'm gonna get blown out. Gonna get blown out now a bit. But yeah, technically I have never had a loss in a crypto trade, ever, which is very nice. I've been underwater for periods of time, but when I close it, I've never realized a loss because it never really took me out of the trade. Never hit my emergency brake because the order entry. The thing I like about crypto is it's so technical that you could buy it like so perfectly or sell it so perfectly. Once in a while there's overshoots, but generally it's very technical. I'm just looking through the charts here if there's anything that like tickles my. You know what's interesting to me here that looks like it's getting ready to go is Google. This was a great trade actually that it put on. And maybe, I don't want to say cashed out a little bit too early, but it was a pretty good one with the breakout or the check back to 169 for the move to 180. And now, to me, this looks like it's ready to make the move to 191s and possibly 204s. I like it here over 181.08. I'm just curious. Let's take a look. The googliness. I just worry about headlines with this one from the Justice Department, although I don't know if they're going to get it worse from the Trump administration. See, here's the problem. There's no expected move in January is $15, so that lines up with what we're looking for. So let's say we bought the 85 200 call spread for $4.46, but to me to justify this, I've got to sell some footage, and I want to sell the 170 strike, but there's not a lot of juice there. Like, am I really going to sell 170, 160? I mean, what am I taking in $1.23? I mean, this is just a joke. The premium here. The VIX is going to have to pop at this point because I just can't put on some of these trades. The VIX is too cheap. So maybe the play is to buy SPY puts, right? When volatility is too cheap to sell, it's often just right to buy, although I don't really see the short just yet in this. Maybe below today's low in SPY like we talked about. Futures coming down again, that 60.13 is a must hold. The Qs are faring better, but it's got to hold that 21,001, 2175 area. Let me check the chat here and see if anyone has anything more they want to. Diamond hands, yeah. I wouldn't exactly say I'm diamond hands. I just know how to buy stuff correctly. You know, the trick I've used, believe it or not, this is going to sound like counterintuitive, but you know when you have those big gap downs in the market in the futures? I've done this now a few times. The thing I go to buy is Bitcoin because it's the craziest, it's the one that I think could always get the biggest bounce. And we've caught like $10,000 moves a lot of really big moves. And it's weird because I'm not really a crypto bro, and believe it or not, I don't really believe in cryptocurrency. For me, it's not a religion. I'm gonna get a lot of nasty messages now, because the people who were big into gold back in like 2011 are all like the worship at the altar of crypto now. I know because I speak to them, and we were not. I'm not really. I mean, I don't want to say when it comes to the markets, I'm a bit of a nihilist. It's just, for me, it's just a chart, and I'll trade it. If it's not nailed down, I'll trade it if it has a chart. I'm trying to look at this Robinhood stock because that's also a crypto play. I'm just playing around with the fib extensions for this because it looks to me pretty strong. Yeah, it's getting close to some resistance. The 38.2 is 36.68 and the 2 times range is 35.78. So this probably has some more room. I'd buy a pullback to 24s to 24s. Let me see if we could do a 1x2 for that. Because Hood, I don't mind owning like longer dated. There's a lot of, wow, check this out. There's a lot of volume in the 25 puts. So if you can't even do $5 wide. Piece of crud. We could only do $3 wide. And it's still a debit in January. This is this is a joke. There's nothing to do on the put side, you know, because I don't like just buying calls usually. I like to, it's not that I like to lever it up that much, but all right, let's just say we went out to January and we bought the 32, 37. All right, I could live with that maybe. The one, see, the problem I have is if they rip, I was going to do a call spread overwrite. Maybe I sell the 40s also, and this brings it down to a 46-cent debit. But I think it could, I actually think it could get to $40, you know, if we get Bitcoin up to 100K, and I don't want to come under pressure. But that's where the calls end, really, the volume in January. The big volume is 37s, and then 40, and then it's just none. There's like nothing. Did they just open up those strikes? That might be the case. Let's say we wanted to really like be ballers here and swing for it. If we bought the 30, I guess the 33, because that's now the out the money, and we sold the 40 for $2, would I do that? I mean, I don't want to sell 28 puts to pay for it. I mean, if there was like over $1 or $2 in the 24s, but maybe I would just buy this, you know, risk 2, and then what I would do here, if it doesn't go with you, is roll down the upper strike to where would I say the volume was? 37. But then I mean, $4. I mean, yeah, I don't mind that actually, because you know what? If that doesn't work, you'll recoup the cost of the trade just with the roll down of the options. So do I want to buy it here though? That's the thing. It's a little overbought, and I mean the risk reward here. You know, I'm going to wait for a dip on that. If there is a dip in hood, I may fill that. I mean, if you want to do it here small and add to it, that actually I think the risk there is very low if you're disciplined with your risk money management, because we broke out of the channel. The check back to the top side of the channel is 29. So let me put an alert here at like 29 quarter. And then if that hits, I'll fill it. All right, so last at or below, buy the dip. And what was the strikes I said? Crap, hold on. I said 30. So at that point, I would do 30. All right, so let me just put in $7 wide. I'll make my note $7. All right, so let's fill that, put that in. So 29 quarter, last at or below, buy the dip, 7 wide call spread. If you really want to, I did last at or above, really? Now I got to re-enter this piece. Last at or below, buy the dip, $7 wide call spread. Let me check my work this time, because I don't want to re-enter this again for a second time, or third time at that point. Yeah, this is all right. So if we pull back there, there's a big, the volume edge is much lower, but the top side of the channel on the first check back, I might layer into it, and then if we were to get down to 25, maybe go a little bit longer dated. But I do like that, because I think you could roll down that upper strike and just recoup the whole cost of the trade, and then it's just cake at that point. A lot of people don't know how to manage these trades, and that's how they get themselves into trouble, because they don't understand how options work. And if you roll down those upper strikes, I also in my youth, what I probably would have done, I would have just left on the 40 and then wrote the 38. So I'd be like, extra short. I used to try to recoup everything. Like I used to try to ride the options to zero, and I did a lot, but what I've realized over time is that if you can get an option down to, depending on the stock, sometimes below $1 in something like a Tesla or 50 cents, or in normal stocks like below 25 or 30 cents, I mean, you've taken out all of the premium, and all you're left with is risk, to the upside. So I usually book those options. And now, there's no ticket fee anymore, so it's not the $9.99 plus the option fee, it's just the options trade. So if you're not booking stuff like that at this point, it's just, it's pretty foolish in my view. So you're learning some good grade risk management. No, I booked NVIDIA today on the pop to 149s. Someone's asking about the 145 one. So I was short a put spread, which I booked on Friday, and then today I knew what to do with that because I only had 4 days to expiration. I talked about this in one of the prior videos, and now it's 3 days to expiration, and I was like not enjoying the ride here of the volatility. So I booked that today. I think I got a fill for 315. If we were to fill that now, it's got to be less, right? Let's see, 286. So and tomorrow, the theta decay is going to get big on this, right? Tomorrow you're looking at 40 cents on that. So, I guess it's not as much because it's the spread, so 7 cents or so, but that's going to increase every day. So, and what if there's a down day tomorrow? The whole trade is blown, right? So what I was thinking about doing with NVIDIA, and it looks like there's a lot of sellers in the 149. I'm just watching the tape, and it had a hard time getting through there. Although Doge last night was having a lot of problems at 40 cents, and then it went to 45, and then it just dumped. But if, let's say we went out to December, I'm just looking, if I wanted to roll the NVIDIA trade and like re-up here, I don't really want to re-up here, but maybe I do. Playing for the last $5 to $7 in this, like I'd feel better at 140, or even, I'm just wondering if NVIDIA is forming a head and shoulders here. Like this build, like if NVIDIA came down to 131 again, 130, then I would think it's building out a head and shoulders, but that's going to be probably a couple of weeks worth of trade before that could happen. And right now it's just bull flagging. If you're long, don't let it get below, 144.42 or even low of day at 146.01. To me, this will probably, my guess is what'll happen with this is there'll be some kind of news that gaps it over 149. And ideally, if you're long, you want it to run ahead of earnings because now there's a lot of expectations for earnings. And they'll probably do well. My guess is they'll be fine. They have that Blackwell chip. I just wonder how much of that will be in the quarter and what the guide will be. The guide is really what's going to matter. So let's say I sold the 140, 135. You really have to do 130. And then you get $3. That's not too bad. I'd ideally like $3.30. I like a third of the width of the strikes. It doesn't always have to be that, but generally I like that. And let's say I bought the 150, 160 spread. That's actually not so bad. It's 75-cent debit. I probably could work the order and fill it for 65 if there's a little bit of a dump into the close. And then if it didn't work for me, I could roll the 160s down to the 155s, which is the channel. And let's just say we, for argument's sake, we did that here. Then you could actually put this trade on for a 93-cent credit if you're a little less ambitious on the call side than the put side. What if we rolled up the put side? Yeah, then it's 38-cent debit. Like if you did 140, 135, and then 150, 155, but you're going to make all the cream on the put side, right? Puts are always a little more juiced than calls, right? Because they have crash risk. So you could fill that. I bet you could work this order for $1 if you wanted to fill this, the 150, 155. But, do you really want to take that risk in December? That will cover earnings, which are in 8 days. So what you'd really be hoping for in a trade like that would be for it to go before the earnings. I'm just going to look in the options series here, the differential in the... Yeah, so if you're buying the premium, if you really... I'm just curious, if we were to do like a diagonal or a calendar here with the 10 DTE on the put side, like if we, because those, the IV there is jacked, it's 76.94. So if we sold the 140s and bought the 130, yeah, there's not enough juice. But although you have only 10 days to expiration there. So, all right, so let's just, for argument's sake, we sold those and then we went out to December and we bought the, if I were going to do this, I'd probably really do it. And I'd do like the 150, 160 And then you could fill this for $1.40 with $10 wings on either side. So that's not too bad. I'd be all right with that. I might work the order a little bit, but yeah, that's not too bad. But the only problem you're going to have here is the puts. I mean, the whole trade is exposed to earnings, but the puts will have at least 8 days of decay if it just stays up here. And you could even just book that, and then if you want to get really nuts, you could roll that out to the December strike, pocket this, and then pocket more, or just take it off and not have the exposure for earnings on the put side, and just ball out with the calls, right? That to me, that I think would be great. So did I overwork the NVIDIA trade there? I feel like I think I overanalyzed it, but that's a trade I might actually, let me see if I could fill this. What would it fill for, $1.40? I'm going to do it for $1.25. I'm going to put that out there right now. If that'll fill, I'll do it. Sent. So let me put that in on 2 accounts here. The 150, 160 in December, and then I sold 10 DTE. The 140, I really hate selling selling premium with this cheap. So I'm putting it out at $1.25. This is probably going to wind up being a frickin' mess, right? I'm going to wind up having to roll down the trade. But ideally, the situation will be is we get some kind of move up, like a beast move up here, because money flow still has room. And then where would it have to pull back to? I mean, this doesn't even have to pull back that much for this to fill. Let me get a little bit more granular here. Like if I wanted to fill it for $1.10, if we get like a dump into the close. The real question here is, though, is do I want it to fill or not? What is this? Oh, you're freaking kidding me. I didn't fill all of my spreads? All right. I didn't adjust the price. I'm just seeing, so let me nix that trade on here. All right. That's really, really annoying. I had it in for 3.25, and it didn't fill fully on both accounts. It's weird. I thought I saw the confirmations on both, but I'll put that back in, GTC, at the lower strike. Hopefully we get out of that in the morning. If not, I'll have to roll it out and play with that one. Wow, that's really unbelievable. But you know what? It wasn't even up there that much. But the 325, I mean, it would have had to have made probably a new high to fill. But the 315 could... Let me see what that would have to get to here. Wait, that's the wrong account. Toggling through all this. So this would, you'd have to get back up another $1.19 for this to fill. I mean, NVIDIA could do that into the close or on the open, so I'm not really stressing that much. And the decay, like we talked about, isn't that big. If that isn't filled by tomorrow, I'm going to have to roll that out or adjust it or maybe just take it off at this point. But yeah, most of that filled earlier, but I still had a little bit on in another account. That really annoys me. Yeah, I mean, you could do... The reason I didn't want to do the Decembers for the put side is because I don't really want to be in the puts with the IV low here, so I was artificially inflating that with the calendar spread for the NVIDIA trade to encompass the higher IV for earnings with the hope that it stays here and that they decay enough to take it off and then maybe roll it out to December or just leave it off. The bad scenario would be is if it dumped hard here, then what you'd have to do is roll down the calls or just stop out of them, and then deal with the puts. You could always beef up the lower strike. Like if we were to if we were to buy 2 on the downside, You could do. I mean, it would fill. I mean, it's like a buck, but you'd probably. I mean, that's here. If it were down $5, you'd be buying them at a more, more of a premium. But that would be a way to defend against it. And then you could always lower the upper strike, and that would compensate for, But the idea is not to be that defensive. And the reason I don't want to do December is because let's say it goes down, you're rolling out now when to January. So, and that's when, you may have people selling because of the tax holdover. Should probably wrap up soon. The market's going to close. I didn't get filled on that Mobileye yet. You know what? I'm just going to walk up the price here and just get filled on some of it. Now they're asking $1.30. All right, I'll do 1.25. I don't really want to. I mean, maybe I'll pay the $1.30. I bet it wouldn't even fill for $1.30. It kills me because I was seeing this at 115 earlier. Would it fill? Let me see, $1.28. All right, let me fill one small order here and see if it fills it. Let me adjust the size. Will it fill at $1.30? It won't even fill at $1.30. What a piece of crap. I've been trying to fill this order now for like three days, and it's not filled. Is it 2 days? 2 days. It's yesterday and today. But that's super annoying. I was trying it like $1.10, $1.15, and then even when it was saying $1.10 and $1.15, I had put it up to like $1.20, $1.25, and it wasn't filling. Is there no? Now it's saying, look at this. It's debit $1.20. I have my order in at $1.25, and it's still not filling. Is there any volume? Let me take a look in the Mobileye for this. I'm doing this for. Was it in January? I was doing it. Yeah, but January January 26. That's why, because there's no. Let me see. What's the volume? Yeah, there's no volume here today. One contract on the $10. That's all that filled was one contract today. The calls have some juice, though. I mean, there was 485 at the 15 strike and 60. I mean, yeah, there's nothing in these. That's why this isn't filling, because there's no volume down there. So I'd have to pay up. I'd probably have to pay. I'm just going to leave it out there, leave it hanging at $1.25. If it fills, it fills, Sort of like Rocky. If he lives, he lives, If he dies, he dies. Or maybe I'll just fill the calls and wait on the puts. What if we were to do that on Mobileye? Mobileye. I'm not even that bullish on Mobileye. I just like the chart pattern. What did I say I was doing? The 125s. Right? I'm sorry, the 125. The 25s. The 20, 15, 25. Yeah. Oh, come on. See, the 15s are now in the money, which is the problem. What are the deltas on this? Does this even make sense to do? Yeah, I mean, there's not. Yeah, I guess 74, 52. Not really. I mean, you need the puts. I mean, you really need the puts to juice it up. I mean, you're really actually hoping this takes a little while to go. I mean, I'd ideally like it to just go right away, but I mean, just to be in and out of the trade and book the winner, but I don't know if this is going to fill. There's not enough volume in this. If anyone fills this, I'm curious what you could fill it for. Now they're saying $1.30. I mean, this isn't going to fill. I know it's just not going to fill. Maybe I'll just buy the stock. I'd really rather buy it, though, at like $14.85. I know, right? I'd also like a Lamborghini for $50,000, but, that's just not happening. All right, guys, I think we're going to wrap it up there. There's only like a few minutes left in the day, but thanks for bearing with me. I don't know what they're going to do with this piece of junk live streaming that cuts out every 25 minutes or 20 minutes. All right, I'm going to try it again for $1.30 on Mobileye and just see if it fills. It's still not filling. I'm not going to just keep. Should I just keep walking it up? Now it's back to $1.25. I mean, Why isn't this filling at $1.30? It's ridiculous. All right, I'm just going to leave it GTC $1.25, and if it fills tomorrow, it fills. A little bit of a weaker close here for ES than NASDAQ. I'd feel much better with the Qs if it could negate this inverted, negate the head and shoulders, but that doesn't look like it's happening here anytime soon. Still no fill on the Mobileye. Now it's saying $1.20 and it's still not filling? Let me walk that back up to $1.30 and see if that fills. I'll do it on both accounts, and if it doesn't fill at the close here, I'll just leave it for tomorrow, GTC. Really pissed off about that NVIDIA. I thought I was out of the whole thing, but now I got some still on. It's not a lot, but I definitely am not letting that go to zero. I hate when you have dividend stocks that pay out and it like screws up your P&L for the day. I have some of these stocks that pay monthly dividends, and there's like this one, and I have a lot of shares, so it's like one day out of the 1 day a month, my P&L just looks like a garbage truck fell off the Empire State Building. And it's not even because I'm down, it's just because they take out the money for the share price goes down because of the dividend. Really? They're not going to fill me? And I just saw that they like locked it in. I think it's done for the day because I just saw the, yeah. And now, yeah, it's down to like, why isn't this filling? I cannot believe there's not a market maker who wants to take it. I'm curious of what it would fill if I just did a market order, but I don't want to get like really banged out on the put side. All right, I'm just letting it sit. If it fills, it fills. And there's no way they're going to fill the full order. I'll probably be like partially filled and then like locked in waiting for that to fill for like 5 days. Microsoft is looking a little better, right? But not negating what it needs to negate. It needs to get over the 430. And then you got 436 resistances. This just looks like a very non-committal tape to me. And last night in the overnight you had, or in the morning, you had a new all-time high in the pre-market. So a liquidation break is possible, but I don't think we have a good high in. Usually those only happen if there is some type of an event. Like the last one that the one that always sticks in my mind is the Osama bin Laden news, when the market popped after that, and then it was just like down, 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 and you had the big like 20% correction in 2011. Oh, wow. All right, I just got some bad news about a friend. Like part of a friend group. Oh, it's not good. All right, I think we're going to bell out here. We did a long video today, right? Am I still on? Is the sound even on? Yep, still on. So we're no fill on the Mobileye, and we were above market on that, which is... The problem was the calls should have, that's 20 cents is a decent bid ask, but for January 26th, that's no big deal. The problem here was the put side, I think, that there was just no volume. There were no contracts traded. And that also really annoys me. And also the 1525 had very light volume. And the 10s, there was nothing. You know what I probably am going to have to do to fill this? I know what I'm going to have to do. I'm going to have to fill the order separately. I'm going to have to do the call. I can't do it as one order. I'm going to have to fill the call spread and then the sell the put on its own. So it'll be 2 separate orders. That I think I can work to fill probably tomorrow. And I'll just put the, I'll just fill it at the mid strike, So whatever, the midpoint is at the time, and that's how I'll fill it. That's what's got to happen here, because there's just not enough volume to do it. It's weird. That's just how it rolls sometimes, right? Wow, we got a lot of people in here. 147. Back in the day when people actually still used this platform, we'd be like up to like 500-600 people. But they throttle my account, and A lot of people stopped using it. Anyone have any questions before we log off here? Besides Traveling Cooley, although he's given us some good stuff to talk about here today. That's it? Nobody? Just type something in the chat if you want me to discuss it. All right, so assuming no one types anything, if they do, we'll jump to it immediately. But so we had three videos today because it crapped out, and I'm gonna, I guess now the market's closed, I'll combine them. I'll trim out the dead space, combine them, and post it to YouTube and Vimeo. So I'm back on YouTube. I actually may start just doing these videos on YouTube. I did it last time, but there was apparently some confusion. People were like, where the hell is it? And then, like, you know, they didn't want to go on YouTube. And then some people were on YouTube. And so, yeah, so I'll post it on the YouTube channel and then the Vimeo channel. So if you're not subscribed to those, just, you know, subscribe and hit the bell, and you'll get notifications whenever I post any new content. Alrighty, I think we'll wrap it up. If you haven't met Fibonacci, this is my toy poodle, who's not so thrilled about being exploited that way. All right, we'll wrap it there.